The traditional markets are closing on new lows, breaking critical levels and headed towards the previous June lows. So let's take a look and see what is going on today and where we might be heading. So the Dow closed down 0.5% today, not too bad. S&P down 1.13, and the Nasdaq, the biggest loser, down 1.4% today. Nasdaq down to that 3,900, headed for that critical 3,800 level. We'll take a look at the charts in a minute. Of course, still unwinding from the Fed and economic data and anticipation of what the Fed is going to do next week. And the debate is on. Now there's a 35% chance of a 100 basis point rate hike and almost certain chance of a 75% basis point rate hike. So what will the Fed do? They're certainly not going to surprise the markets. If they're going to do 100 basis points, they will telegraph that. They will let that out. They will not just do it unless something serious happens between now and then. But right now, it's all about inflation. The Fed's credibility is on the line. They have got to get inflation down. Their target's 2%. And you're now hearing the Wall Street pundits come out and complain about what the Fed is doing, saying they do not need to raise interest rates. Cathie Wood saying they don't. Elon Musk is saying they don't. And a few other people, Kyle Bass is talking about it. And he's he's got a big bond play on. So they're obviously talking from their personal perspective of their portfolios and their issues. Obviously, with Elon, he does not want Tesla stock to go down any further. Cathie Woods is trying to get out of the abyss, and anybody in the bond market has been getting wrecked. So that's why they are saying the Fed doesn't need to do anything else. And pretty much most of everybody else understands that the Fed has got to get inflation under control. That's going to do way more damage than market meltdowns. The housing market's out of control. A lot of the younger generation is priced out with interest rates where it is now, and no inventory and housing prices is just inaccessible. So that has to come back into check. And the only way to do that is to keep interest rates high. So I don't think you're going to see the Fed funds rate below 4% for a long time. So Wall Street is now starting to reprice to new levels of Fed expectations, longer, higher. And they are realizing that the Fed is serious this time, and they're trying to get their credibility back. We'll take a look at the charts in a minute, but Willy Woo, a lot of people know Willy Woo has weighed in on the Bitcoin conversation in terms of have we bottomed? In terms of max pain, the market has not felt the same pain as prior bottoms. And that's what I've been saying. We have not had that capitulation sell-off. We have not had that desperation in the markets that everybody thinks it's just over, it's going to zero. It's been the opposite. More people are calling the bottom, calling the June lows, and saying that we're going to be back off to new all-time highs in a global macroeconomic bear market, tightening financial conditions, Fed hiking and unloading the balance sheet, and recession. So I don't know where people are thinking that we're just going to all of a sudden reverse course and go into a new bull market. And Willy Woo is now agreeing. Willy Wood, yeah, he's in the same boat as Cathie Wood from his previous, $500,000 predictions, $100,000 predictions. But anyways, so he's saying we've only that right now we can see that in the blue line, supply and profit by Glassnode, we've only reached 52% of coins being underwater so far. Prior bottoms were 60, 64, and 57. So if you look at this indicator here, and the trend lines were clearly broken each time before the bull market resumed. And if you look at the distance of consolidations in past cycles, we haven't even reached the bottom yet, much less a consolidation to get back to new all-time highs. And like I said, a lot of people are calling for new all-time highs right here, right now. And it just doesn't make any sense. Now, can Bitcoin hold current levels and go from here? Potentially. History doesn't need to repeat, especially in the modern era with futures hedging available that is not picked up on chain. But if we do get a repeat with max pain reaching 60% of the supply underwater, that price is currently $9,100 and slowly drifting upwards with time, which brings me to one of the signals that I'm watching. This is Willy Woo before rotating capital back in. Supply in profit trend line break. It broke cleanly in all of the bear market bottoms previously. So that's what he's watching right here. As soon as this trend line breaks and confirms, then just like it did back here, just like it did over here, just like it did right here. So that's what Willy Woo is watching. And, there are some technical indicators in Confluence that we've gone through that would indicate that this potential bottom could hold, and it is a possibility that it could hold. But given the tightening financial conditions and drying up of liquidity, interest rate hikes, and things like that, it's just not realistic or probable that the bottom is in right here. This is the previous all-time high, 2018. But right now, price has kind of found support on. So that's the big line there that we've been watching for a couple of weeks to see if that holds as support. Dow Jones has taken out this previous level here. NASDAQ has taken out that previous low. Excuse me. S&P just took out the previous level. So now we can look for more continuation down to retest some of these previous low levels over here. So that's what we're going to be watching next to see if those support levels will hold in this area for traditional markets. The Dixie is continuing a little bit of a rebound. Oil dropping again. A couple of people calling for $150 barrel oil. So we'll just have to see what's going on. So there's a lot of different calls across the plane on Wall Street and the markets right now for different things. But until the Fed does their thing, we see what the reactions are to that. Whether the markets continue to reprice and drop into the Fed hike, or if they kind of stay where they're at now and then drop when the Fed hikes, we'll just have to wait and see. But what will probably happen is markets will continue to drop into the Fed hike and then maybe bounce on the actual day of the hike and then continue their downward trend after that to retest those June lows. So that's what I'm looking at, and I will